The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everybody. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. Today being a market day, 27th of March. And thank you to John, Steve, Tom, Daryl. Great shows leading into this one. And I hope at 11 o'clock till noon at 877-927-6648 to be able to give you the same kind of quality. We got programming right through the day. And, of course, you've got Nico and Paige straight after me talking about health. You got Daryl back again. You got Dave White. You got Tom and Dave White later on in the afternoon. Whoa, full day. Now, let's look at a couple of things here. Number one is within the context of this sell mode that went right back, the down went right back to a sell mode. With that very sharp turn down, what we're looking at here is how the weekly is going to play out. Also, I have a number of questions, and I think we'll get to the questions being Technical Friday. So let's just run the numbers as quickly as we can. We've got the Dow up 37, woohoo, up 37. Of course, the day's young. You can see that buying keeps coming in, and they're trying to rally the IBB, the biotechs, which have been smashed to the downside. We'll see how they should have a good rally into maybe Monday, even Tuesday morning. And then we'll see what happens. Now, looking at all the indices, you got the Dow 36 at 17,715. The S&P's up 5 at 2,061. The comp index is up 21 at 4884. This is very important. You've got gold down 8 at 1196. Why? I mentioned to my subscribers to my opening call. Very comprehensive look at markets I give every single day. I start sending out charts at about 6:30, 7 o'clock in the morning. At 8:35 is the final one, the Trader's Corner, and they can go anywhere. And we don't even have to have positions on with the charts that I send because they are relevant to the market. It's an educational process as well as a particular position play process. So what I was mentioning is that the dollar looked like it was ready for a bounce. That should impact gold and the euro, and we'll see just how long this counter trend, I call it a counter trend rally for now because I think that the dollar overall is still within a consolidation phase, and that consolidation phase should go on for quite a few weeks. And if it's going on for a few weeks, you should have residual rallies in the gold, maybe even the crude oil continues a little higher, and you've got the euro. And these are what I would call counter trend because for me, the major impulse is that the dollar monthly chart and the weekly chart are still holding extremely strong right here, technically. You've got, because the DAX ran up quite nicely. Britain is down a little bit. UK is down about 38. So this is, right now, we're at an inflection point because of a number of factors, which we'll go into. Let me just say that silver's also down 18 cents at 16.96. Platinum is down 11.43, and it's at high-grade copper at 2.77 now. This is going to be very interesting, down 4.25. What happens to high-grade copper? You know, I am of the belief that based on the technical factors that I monitor, that we're within the third week maybe of some kind of a mini recession. I call it a mini recession for two reasons. One is, I don't think it's the larger type of recession that we get that goes on for 8 months, 6 months. I think this is just a slowdown that's being recognized, and that the market effect, I should say, is about 6 weeks. And we've already been consolidating. The Dow hasn't made a new high above that 18,288 level for a little while now. So this is just my thinking here. And there are a couple of things that go along with that thinking, and I'll show them in a moment. I wrote it down. I've got to remember to look down at my page. So yeah, we're going on. Crude oil is down. It's at 50.19. That's down $1.25. But this is very interesting. Bonds are up $1.13, almost $1.50. The TLT is at 130.48. Now, I need to show the chart right now. You see this chart? It sounds fantastic. Up a dollar at 130.48, up 0.79%. But it's the smash from the downside that we had that was from the 132.76 area back on the 25th. Yesterday, you came down really short, turned around that day, and then followed through with a gap down yesterday. How we retrace is going to be really important because the pattern that's forming now, you know me, I just grab this just the same as I've done with the dollar and everything else. It makes these very sharp flag pole formations. I just grab it and make a rectangle. So, okay, there's our trading range. The close below, two closes below 129 in the TLT would be a negative. You had that huge island reversal that only took us to a peak B. There should be, there doesn't have to be, but in the daily there should be a C above 132.76. If we don't get there by Wednesday, 3.5 trading sessions time, that would suggest that the pattern that I drew in the weekly chart of that arch formation is unfolding, and then I'd be able to, I'm going to do it now, but it's a little premature, but I just want to show what I'm looking at, and then I'd be looking at something like this. And that's that rectangle formation that's forming to create some kind of an arch. And I think that we're in the arch formation in the TLT after a spectacular move to leg D in quite a short space of time, making a cup formation in the monthly. So we watch this real closely. Going on, we want to look at the dollar. The dollar, it's not doing all that much. It's had a bit of a bounce, and it failed to the 9-period moving average. Right now, it's at 97.63 in the futures. I've got it at 97.33. So the 63 puts it right on the 9-period, just a tad under the 9-period exponential moving average. We're going to watch that real closely. Now, here's the other thing. In the context of, so I just wanted to show that. So there's peak A, peak B, but a very sharp pullback from B with that 200-period moving average in the 120-minute chart. Man, I tell you, you got to have a couple of techniques that just sit there doing nothing until they're needed. Right now, it's needed. The 200-period moving average, that goldy brown, pinky, orange, whatever it is, color, right there, 97.56 is that level, and you're at 97.33. I think we just mess around here, not doing very much for just a little while longer. Okay, I think I've done enough of these things. Let's go to the technical questions. Euro, dollar. Yeah, nice rally. There it is. It's going to be forming the H pattern, lowercase h that I call the lowercase h that can go to a lowercase m pattern, arches, a series of arches. So that's that. Now, first question, SPX.X. Where are we? What are we doing? What? I optimistically drew in a rather large arch formation that took you above the 2075 level if there was a very serious bounce here. I think there could be a bounce because I'm looking at some of the very weak sectors and stocks from this week that are now having nice rebounds. That rebound could continue. Most importantly, what we're looking at here is that the support that has to hold, regardless of what happens over the weekend or into Monday, that support that has to hold is 2045.50 in the cash S&P. Now, what's really important is that the weekly close has only another 4.75 hours to go. If within that time there's a very strong rally in the S&P, it's possible, and that rally goes from the 2062 level now to 2072, that's unlikely. But if it does, it'll be over the 9-period exponential moving average in the weekly and suggest, yes, once again, we might be able to look at this as a possible peak C1, C2, still going to a leg D by next week. That's really tough. The way I'm looking at it right now is that there's been so much selling pressure that within another day and a half, by Tuesday afternoon, Wednesday morning, we should start to see a failure pattern again. If there isn't a failure pattern, but there is strength, that's going to say that the Energizer Bunny is just powering. It has still many buyers. And if you look at the VIX index, that's what I haven't looked at now. I'm just going to do it. I'm coming right back to the S&P because we haven't finished. The VIX index made a double top at 17.17. It should have gone higher, but it didn't. It stopped at exactly 17. Oh, my mistake. By the time everything was closed, it went to a higher high. It went to 17.19. 17.19. And that suggests that I've got to still call that. No, I can't call it leg E. I have to call that leg A. Isn't that interesting? So I'm calling it leg A. Why? Because we went as decisively underneath the left side low bar that started the buy mode that went to a peak D. That makes the VIX index in action rather than plunging down to the 1483 or lower by the end of the day. We've got to watch this really closely because it looks to me like some buying has come back into the volatility index. Doesn't matter. By 4 o'clock, we will know. Another 4 3/4 hours, and we will know whether or not the VIX index for the weekly chart has a green candle closing above. Let me give the exact price right now. Above 1620. Can't be 1624. 1525. 1525. And right now it's at 15. Oh, man, come on. Give me the right price. There it is. No, that's not the one. I want this one. Yeah, I think that's it. Yeah, 1520 in the 1525 area. And that's going to be very important. Why? Because if there's a reversal very soon, and all of a sudden you see the VIX index start to climb steadily, and it closes the day closer to the 1560 area, that's going to suggest that those people that were ignoring the VIX last weekend, you remember going into it, I said, isn't that incredible that we were down so sharply, and even Monday, and we didn't, the VIX really only perked up Tuesday and Wednesday. That was very unusual. So it means that now you've got the heavy buyers who are actually interested in protecting themselves in the volatility index. Whoa, isn't that interesting? So, okay, now let's get back to the S&P. So let me just give you the numbers as I'm signing out here of the VIX index. Parameters are a close into the high 15s, 1560-ish area or higher, would suggest that there's nervousness going into Monday. A close underneath 1484 would be amazing because that's the 9-period moving average. Let's just be a little bit more conservative and say the 9-period moving average of 1525 on the weekly chart. A close below that says, we're still not interested in protection. This market could still bounce a little bit more before it goes lower. Okay, so now we're going to go back to the S&P. So the daily, make it clear, made a peak D top. I now have to put in a down arrow, and that's a sell mode. It doesn't mean to say you can't, look, it's just been bouncing up and down, making these arch formations. Doesn't mean to say within another day or two, you could suddenly give a signal that says, hey, I'm interested in going even higher. Right at this particular moment, I have to suggest to you that the S&P has parameters based on the 120-minute chart of 2066 as strong resistance, and it better hold this bar's low of 2052, or else there's a real problem. So I'll be talking a little bit more about this because I want to talk about the peak C1, C2 in S&P, and then there were many other questions that I will get to as soon as we return, as well as you can call me. I'd love to hear from you. Basil Chapman.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Just a real quick question in the den during the break. I just did this Liberty Global PLC C shares. I haven't even typed C shares for I don't know how long. I don't even remember doing it. It's a leg C in the monthly chart. So we got to wait until April before you can tell whether there's going to be a peak C. But there's a peak D in the weekly chart. This is the first peak D ever since it came out. Whoops, is this the first one? No, it's not. Yes, it's the first peak D since it came public. So expect that there's a chance that it's a little bit deeper and longer than the previous one, which took about quite a while, 3 weeks to resolve, 3 months, I mean. So this one here has also got a peak F in the daily, so be very careful here. The high of 53.66, down now at 49.99, struggling to make a leg up. I would suggest to you it's at 49.99, LBTYK is the symbol. If it closes under 49 by midweek next week, I just say step aside for a while. But it's on my list. In fact, I'm going to write it down right now because it's on my list as a stock in the monthly chart that should still go to a leg D. So longer term, yes, looking very good. Medium term, it's holding in a pattern that says consolidation, and the daily chart it says be careful because it could very well have a slide to fill the gap underneath 49, and that would be a negative, suggesting that candle, big candle of the 13th of February down to the 46.96 level will become a focal point. So let's get back to the S&P. Really good question in the den about what's the difference between C1 peak C1 C2 and peak C failure. Great question. A peak C failure implies, in other words, I would put a C minus, implies that you have gone in a pattern that looked like it was a very strong leg A to a B and going to a C. And then out of the blue, instead of going to the D, the C starts to fail because the technicals are breaking down. That suggests that there could be a pullback of more than 50%. That should still keep it as a peak C. If it starts to take time and closing under 50% towards the 60% area, 63% area, that would say, think of it as a failure pattern. If it's a C minus, C minuses suggest strongly that it's going to go all the way back to the starting point, the buy signal low bar. A peak C to a C1, like we are looking at here, the potential for this, we'll only know next week, of it occurring in the chart as the technicals remain strong enough to suggest that everything about the last leg up had the characteristic of going to a peak C and then extending after a period that has made it a peak. And a period could be 1 bar, it could be 2, 3, number of bars, to leg D. And then what happens, instead of making the leg D, remember 2119.59 is the S&P high. And then on Monday, it had that spiral to the upside and it went to 2114.86. Hey, in a long-term chart like this, 4 points is like a blink of an eye. There's just nothing on a weekly chart that a sneeze could have taken it there, and it couldn't do it. Tuesday was the day that it should have done it, and instead it ran up after the last hour pullback on Monday, and then it couldn't make the new high. So here's the characteristic of a peak C1, C2. And it can only be a C1, C2. And the reason why we've got it is over all the years that I've done it, hundreds and hundreds of thousands of charts, the peak C1 and C2 concept came to me. In fact, I had a laugh. I found a book. I haven't got it in front. Yep, it's up there. It's up on one of my top shelves, my library here. It's a very long-term chart. In fact, I put it aside and I thought, you know what? I'm going to make it an offer on the in the den for anyone who wanted it, and I'll send it to them as a gift. And then I thought, no. I'm getting a big cleanup here. It's not my choice. It's my wife's choice. Choices. Time for a cleanup. I hate cleanups. I know where everything is in the piles that I have. When I start to clean up, it confuses everything. So it'll take me 6 months before I get back to my normal confusiality that I know so well. So what we're looking at here is that very long-term chart I had drawn. In fact, this particular one, I even distinctly remember it, and it goes back 20 years, maybe, I don't know, maybe more. I remember sitting in the lodge at Killington or one of those ski resorts, and I'd gone up with my son and come down, and I said, hey, this is not for me. It's too cold. I love sport, but a cold sport, not for me. You go enjoy yourself. I'm in the lounge. I'm in the the dining room, enjoying the food and with my charts. And I had my charts, and in pencil and with a ruler. That's how I used to do it. I'm busy notating the charts, and lo and behold, I've got a C1 and a C2 in one of the long-term sugar charts or something like that. And I said, wow, some of these things go back. So now we've got a break coming up. Oh, that was quick. All right, so this break coming up tells me that I must take a moment, and I will do this. I'll talk about the C1,
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. Basil Chapman, Tiger Technicians out. Dow's up 22, S&P's up 3.19. Really working hard. A couple of pockets of strength, but mostly people are kind of just sitting back and watching, I think. A little nervous there. So now I'll be back to the S&P weekly. So let's go on with this peak C1, C2. Number one, the characteristics of the technicals have to suggest that it was just other forces that just didn't allow it to get to those few cents. And I don't want to see a price difference of 2119.59 on the left side, peak C1, and then you're trying to make something like 2100 a peak C2. It's got to be very close. It's got to be as if you're looking at the technicals, you would have said, oh, there must have been a bounce that almost went, or maybe just went to a slightly new high. That's number one. Question is, Basil, any major tops with peak C1, C2 that you can recall? That's the bullish side of this whole thing. I don't recall major tops in a weekly chart that have gone to C1 and C2. However, I must emphasize that in this period now, I'm seeing some of the weirdest notations that I've seen this period going all the way back from October to now. I've had some of the strangest lettering. I've never, ever seen that out of the hundreds and hundreds of thousands of charts. And you know that because I've discussed it here. And that's why we've been waiting patiently for leg D in the S&P. And the best thing that I can say is, now I'm going to go to the Dow in a second because I had a question from Steve about it. So Steve, in an email, who's what does he ask? He says, "Hey Basil, always enjoy and appreciate your show every day. I would be lost without the Chapman wave. On the Dow, would you consider the bottom yesterday as the start of leg D from the top of 18,289? Also, you mentioned that you were not necessarily looking for the Dow to make a peak D on this last move up. Did I hear you correctly? And if so, would you elaborate? Thanks, as always, Steve." So, Steve, thank you for being a listener, and I appreciate that. Now, a couple of things is that the Dow, I was saying it would be a leg E if it went to a higher high. We've already done everything in that. That's the reason why I told my subscribers, for those who were interested in looking at the short side, why we wanted to go short, how we did it, and what we did it on the Dow based on the criteria that we were looking at. And it was for those who had never done it before. It was really a starter position to get a feel. In fact, let me just have a look right now. DOG. They're breaking. Oh, they're up to a couple of cents, and that's an amazing thing in this kind of market. So on the short side, so it was to get you used to being able to play the downside. Otherwise, this market has control of you. You want to have more control of the market. That's all. And it's a tiny position. It's a small position for those who've never done it before. Now, let's go back to the S&P. I'll answer that question. So the S&P weekly had all those carries. You see how the MACD deflected lower? See how the stochastic was, in fact, running and then it turned down? So a bunch of these characteristics say that the price could almost have made it, and it was 4 points away. For me, that's good enough, legitimately within the context, without breaking any of the Chapman wave rules, to call it a potential peak C1, peak C2 if there's no new high bar next week, but we close very close to 2091. I'd have to say, yeah, it's C1, C2, but you know what? We could still go to leg D the following week in April. That's the way I look at it. If we close decisively underneath 2072 today, and then next week we close underneath the 3 weeks ago low of 2039.69, that up channel trend line is going to be tested for the first time since back in February. It's a weekly chart, and that'll say that a close under 2032 would suggest that we have now made a top, that the Dow, I can go back to the Dow, that we've made a top in the weekly chart. And this, look at that candle in the Dow. That is not a good candle in the weekly. After a peak D at 18,288, that's why I'm saying the day is young, but we are testing key support levels. Look at that gray line. This is a weekly chart, not talking about the monthly. We're just going to leave that for now. Let it play out. By the time we get to, what is it? Monthly finishes up on, we've got 31st is Tuesday. So we've got a couple of days, no big deal. But look at this candle. It didn't even, so far today, we've barely been able to get above the high of yesterday of 17,759.51 in the daily. So what I was saying is, let me rephrase that again. For Steve, the question was, I was doing that by memory, and I forgot that I was thinking weekly chart, and I think I said daily. If I did say daily, that was a mistake. I was really thinking of the weekly chart. The weekly chart has already made the peak D. That was my point, that it can now go to an E. That's fine. But D is what we look for, and you've had your sharp pullback. It's trying to hold that support level. That's the most important thing right now, is the MACD is negative, deflected lower. The stochastic, 68% negative. It's the weekly chart. If we close like this, let me just double check. I don't want to talk out of turn. If we close like this, the weekly chart has gone to a sell signal for the very first time. And that's going to be very important. First time in a while. And if that's the case, that suggests that, yep, it can recycle up. It's not a sell mode, but it's a sell signal. And that sell signal says that's your first step. Break under the 9-period moving average after a peak, D, E, or F. A close, the third close within 2 weeks under the 9-period moving average, testing key support levels. MACD goes down or deflects lower, and the stochastics way under 80%. All those criteria have been met. That's what I was trying to say. And we went to, there's your peak C minus. Peaky in the den, that is a C minus right there. The Dow went to 18,205.93 on the 23rd of March. And the moment that bar took out that 9-period moving average so decisively, you could say to yourself, wow, really good chance that any rallies from now would probably have an A, then a B, and then get back to that C. I can call that a C minus. The moment you broke under 17,620, you didn't have to close. The moment you take out the left side buy signal low bar, that's it. You're done. You have to forget about the buy signal. You're now looking at where's the new buy signal, because it's negated that completely. Hope that's clear. Basil, can you apply fib bands to the IBB? My thinking is we get down April and then another run to a high in May, and then it combusts. Well, if you want to do that, let me grab a chart that is already, does it have it? Let me see. It has, no, that was set up for me. You know what? I'm going to use this if you don't mind. And we're talking about a daily chart. This has something like Bollinger Bands. They're real close. It's the E-mini right now. Let me go to, I'm going to change it to a daily right here, daily. And then I'm going to go to IBB. And you will see that the IBB has just turned down. You see that little, that green, and then it turns down. And you're absolutely right. This is the equivalent of a Bollinger Band. And we went right to the resistance. We've broken the support level. So you would probably be looking at a weekly to say, where is the support? And that's at 306. That would be the next kind of, I'm not sure if the count, I think it was made for me. I'll have to check it. I don't want to do that right now. Maybe I can. Give me a second. No. All right, I can't. But it's like a Bollinger Band, right? And it's gone to the top, and now it's pulling back. And we'll see exactly what happens. Couple of things that I wanted to talk about here. So I hope I answered that question. Next thing was a question about PHI. Let me double check. Paul asks, PHI is, now it's so interesting. He asked me about PHI. Nice, I love it. When you send me an email, I would prefer if you put the stock symbol right in the title. Why? Because when I'm scanning with all these things, and I'm for some reason I'm getting so much junk mail, I just want to see what it is we're looking at. Most importantly, I don't want to actually have to read the email, but when I'm on the air, it's just a little difficult to do. So PHI, wrong one. Let me put it in here, PHI. Now, by mistake, I'd hit OHI. OHI is Omega Healthcare Investors. So I was going to talk about that. And I thought, gee, that is an interesting stock. I don't remember seeing it before, but that's not the question. The question is PHI. And PHI is the Philippine long distance telephone ADS. Gee, I wonder if long distance is still a viable thing these days. I haven't done it for ages. This is updated. Let's see. This goes to a potential peak F. It is a peak F right there at 78.45. Trading at 62.66 right now, up 21 cents. But that high in September of last year has gone many times, second time, third time underneath the 9-period exponential moving average in the monthly chart. But this is the most important thing. You see that trend line? Look how it's bumping. It keeps trying to hold it, and it can't. And the stochastic's not good, and the MACD's not good. I think it's going down. I would not be looking at this on the long side. That's number one. Number two is, what would say that's based on the monthly chart, but the month needs to finish to really conclude that. Now, what's really important is that the weekly chart made a doji. It makes these doji candles every once in a while. I remember that from this chart. And they're quite significant. They were at the lows when it hit the 200-period moving average. That's that orangey color right there. And that's kind of important. Why? Because within the weekly chart, it's tested it once, came back, retested it successfully, went all the way from the 162 area to the recent high of 72.34 doji high. Then it pulls back as a retracement failure mode, goes back to the 9-period, the 200-period moving average. I don't like second chances at that one. I want them just to move away and scream and forget about them. Now it's come back as a focal point. That says to me, especially with this doji candle being played out right now on the weekly chart, be real careful, because in this almost like a Roman candle, if there is even a tick below 61.36 in the weekly chart, I'm not even talking about a close, a tick below it, you got to watch out, because the low of 60.59 that was made in December, that low would be tested very quickly. So the upside based on the daily chart, now I can see what you're looking at, the daily chart. Yesterday's candle intraday was actually quite good. The close was not. Today's, although it's up 21 cents, the MACD is trying to turn around. The stochastics made a little bit of a positive divergence, but I hate these rectangle formations. They can just keep trapping you, thinking that you've got to trade when all you've got is an intraday little pop or drop, and that's all there is to it. I would actually say to you, wait until it closes above 63.23 on a daily basis. That'll probably be a leg B or C, and a very tiny move to the upside, but that'll be the first sign of strength. It's got to close above the 9-period moving average of 62.63. Just make it as simple as that. And this is a stock that likes to go to D's and E's and F's. Let's see what it does here. A, B, C. So there's a C1, C2. Perfect. Goes to 64.17 on the 23rd of December, and it goes to 64.16. Yeah, 1 penny below. And look, all the characteristics say that should have been a D. So I'll type this in. Let's use this as a great example, and then we'll find out what we get on the way up. If I've miscounted or whatever, just look A, B, it would have been C, and then I change it to C1, C2, 1 penny difference. Everything about it said that should have been a peak. And then I put a plus sign. I usually put the plus sign in red to say, hey, I can't put a down arrow because that would defeat the purpose of this particular exercise, because it's below the actual peak C. So I have to put a red just to signal that it was a potential. There could be a D, but I'm calling it a peak C2 like a D. And then the stochastic pulls back sharply. MACD holds above the 9-period moving above the red line, the slow moving average, and then it starts a brand new move to the upside and goes peak A, B, C, D. And then it pulls back. Same thing again. So we can go down arrow. Hope I'm doing this right. And then it goes very sharp leg A. And we don't know if that's an E or an A, but we'll call it an A for now. And then it goes B. Yeah, look at that. C, and you get your requisite D. In the Chapman wave, you're always looking for Ds. That's where the information is imparted. And lo and behold, it pulls back. And now it's done it hasn't gone 100% to the low. So that's the best sign. So all I can say is I would use strength to at least nibble. I wouldn't get heavy into this, but at least nibble if you wanted to do anything. Definitely not weakness. Why? Wow. If you take out that 61.36 low, yeah, on the daily basis, not like the weekly, on the daily basis, you need to close below it for 2 sessions or more. That'll be very negative and say you're going down to the next low bar. So this is maybe where you can keep your eye on it, Paul, and I just wouldn't get carried away. I like V-shaped turnarounds like that over there. You can do a retest after that, but I need the torque to give me the momentum. That's the most important thing. Okay, and that was that question. Yeah, then there was a question about if I can just recall, just a general thing about copper. Why am I looking at copper and saying that it's acting okay when the monthly chart is still so bad? I'll talk about that when we get back. Basil Chapman, Dow's up 24, S&P's up 4, 136. I wouldn't call it a ho-hum session. There are a couple of things going on that are quite important. I'll be back. We'll talk about it.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We got a caller. We got John in Philly. Let's do that before we go to Nico and Paige. Hi, John. How are you?
I'm very well, Basil. Thanks for taking the call. I wanted to ask you if you can pull up TLT again. I know you went over it earlier.
Yep, I got it right here.
Very specific question, and I'm making note. You've pointed to a converging of 5, 10, and 30-year yields on your weekly charts. So here's my very specific question on TLT. It's currently 130.5. Very specific question. Do you suspect the next 5-point move is higher up to 135.5 or lower down to 125.5?
So now that the specific question is the TLT the next 5-point move up or down? And my answer to you is that if it's a 5-point move that we're talking about, I think that you're going to have a real tough time. I can see a 2.5-point move up or 2.5-point move down. I think we're trapped in a range right now. That's the way I'm reading it. And I suspect that the TLT might not get to that leg C, which would be at 132.76. That would be within that 2.5 point range, unless the Dow starts to pull back. The S&P and the Dow and the comp index start to pull back now, so that money can go back into the TLT. My thinking here is that the Fed is really trapped at this particular point. They are wishing for They would love to have turned around and said, you know what, you remember I spoke about, wouldn't it be great if the Fed very quietly in the middle of the night raised by 1/4 point and nobody knew for a few days and the market actually held, and they said, whew, great, that's exactly what we're looking for. But I suspect that the Fed, in a way, based on their information, would like to see rates go a little bit higher, more as a test than anything else. But I think they are trapped, and if I'm correct about some kind of little mini recession, very often higher rates create mini recessions. But I just don't, there's such competition, although Japan has just had a bump up in yields. I think there's just too much competition. I think we're trapped in a range right now that if you are short, you want to see the low of yesterday taken out, a 129.18, very quickly. Speed is of the essence, so that if we do get a lower low on Monday or Tuesday, that is below yesterday's low of 129.18, then the 2.5 points will be to the downside quite quickly. My thinking is it's just kind of trapped here, and then we can go a little bit above to 131.36-ish, somewhere around there. That'll kind of store. It'll take time, I think, to get to the 132.77 for legs C if it's going up. But I also think in this particular pattern, the weekly is saying slow rollover. If there is a rollover, 129 is the 9-period exponential moving average on the weekly chart. That's going to be a test. A close on any day below 129, I'll be watching that weekly. But I actually think that we just kind of trapped within that range. And did I have a chance? Yes, I did. I'm showing right now the cluster formation that I was talking about in the 30-year, 10-year, and 5-year yields. We're going to follow that real closely, because so far there's just a hint, but there's no sign of some kind of inverted yield curve. I'm watching that. That is what we've got to be very careful for, because that's when you get your deepest declines in the stock market. So far, it's a hint, but I don't see anything yet. Does that answer your question?
Basil, thanks very much. You have a nice weekend.
And you too. And it's a very good question. And of course, those are the parameters I'd be looking at. So folks, just as we're about to sign off, rest of the day, now it says it's a choppy action. And my suspicion is that this choppy action might go right into the close. Two things to watch for is the VIX index. The VIX right now is at 1554. It bounces back to the 16s as market comes down. It holds here, or it goes down to the 1530s. There'll be some kind of a rally into the close. I think it's just kind of a mixed market here. And have a wonderful weekend. And the second thing is, hey, listen to Nico and Paige for some great information.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.